Hello, welcome. My name is Jason Martin with AllGen Financial Advisors. Today's February 4th, 2025, and I just wanted to do a quick market update. There's been some concerns over the last couple of days regarding tariffs that the news media has been reporting on, and I just wanted to address those concerns and talk about how we're positioned, how our clients' portfolios are positioned to be able to handle any market volatility. So let's just jump in and check out this first chart. This is just a chart of some of the main asset classes year to date. I think it's really important to point out there's been a little volatility over the last couple of days. However, markets are still doing really well for the year. I mean, just through the month of January, actually this is through yesterday's close, February 3rd, the S&P's up 2%. The international markets are up about 2.4, bonds are up about 0.7, and gold is up 7.4%. So for the year, if you take just 1 month through the year, the markets are doing pretty solid, and the overall news has not negatively affected the markets. And if we look here a little bit closer, this is the S&P 500, and as you can see on this chart, this right here was Friday's close. This low point right here. You can see that on the news Monday, markets were down 2% intraday. That was what caused concern along with the media. But then you did see the market rebound, and as of this recording, it's pretty much recovered all losses from yesterday. And I think it's also important, this is what the market looks like, or the S&P 500 looks like over the last 1 year. And you can see it's doing pretty much what people want it to do, going up and to the right. And, you know, if you think about how negative the news sounded about tariffs, but then you actually look at it visually and see, okay, that's this little blip right here. Compared to when the market's going up, you know, and to the right, that was the little blip in the news. And so I point that out to say, you know, and I don't mean this in any political sense whatsoever, but you have to be aware of how the media works. The media drives its revenues. The medias get their revenues from ratings, essentially from advertisers that are paying higher amounts if their ratings are higher. So the way media companies make more money is they drive more people to watch their show or their media outlet. And the way they typically do that, one of the most effective ways, is to make people scared. And so they over-dramatize certain events, and this is not to take away of the importance of the tariffs and certain things that happen in the news, but it's just to make you aware of what the media does, and both sides do it. Again, it's not a political comment, but it is important to know that, because what the media says is not always the reality and what the markets are doing, and a lot of times it could be potentially the opposite. And so I point that out just to say, you know, hey, some of our best clients, they don't watch much media. I personally don't watch much media for your sake, for our clients' sake. And the reason why that is I want to drive the decisions of the portfolio based on data, not people's opinions. And a lot of times the news media is people's opinions. What Trump did with the tariffs, he announced he would do that in his campaign. This was not something new. And so the market was already expecting this. The market already prices in what they think is going to happen in the future. So I say all that not to hate on the media, but just to make sure people focus their efforts not on what is big in the news at that moment, but more so to have a long-term mindset. There's so many studies that show how just having a long-term mindset and staying invested does so much better than when you try to time the market or even make adjustments to your portfolio based off of certain news events or feelings that you have. So I just want to encourage everyone just to have a long-term mindset. Don't allow these short-term things in the media to cause you to, one, have angst and not be able to sleep at night, but two, make an irrational decision and potentially sell out at an inopportune time. Obviously, we're trying our best on our end to position the portfolio to be protected for no matter what the market throws at us. And right now, as of year to date, the majority of our portfolios are actually outperforming the benchmark. And the reason for that is we hold non-correlated assets. So holding non-correlated assets means you have certain asset classes that go up when the market goes down. And just as an example for that, if I flip back to this chart, you can see when the tariffs were announced, both U.S. stocks and international stocks went down. However, gold went up and bonds went up. That would be an example of how non-correlated assets work. You hold different things in your portfolio that do well at different times. And it may even be the reason why we hold an asset that's potentially underperforming for a period of time, because we're holding it as a contingency. If something was to happen, that particular asset should do well in certain environments. Certain environments may include assets may do well in an inflationary environment or a deflationary environment, in a high growth environment, in a slowing growth environment. So we hold asset classes, non-correlated assets, in our client's portfolio to protect for all those different events. And it smooths out the returns in the market as well. So all that to say, while the tariff news initially rattled the markets, they quickly rebounded as of the recording of this video. And just, be careful, have a healthy level of skepticism about what you hear in the media, and don't allow that to drive your emotions. And then, final point, we do own non-correlated assets to protect for risk. I mean, that's true to our investment philosophy, which is we always try to manage risk first, holding a well-diversified portfolio that tends to hold up in times of volatility. So if you have any questions, feel free to reach out to your advisor, and they can give you more specifics about your portfolio. But I hope this helps. We'll do more market updates, if anything significant happens in the markets. And certainly we encourage everyone to attend our quarterly market update where we go deep into all types of charts and analysis. So thank you and take care.